What's up, everybody? Michael Silva here to discuss the Nasdaq 100. Is this the tech bubble 2.0? Well, we're going to dive into some time frames on the NDX, which is the Nasdaq 100. We're going to look at the monthly time frame and the weekly time frame. Those are going to be the two time frames I look at to determine where the price might be headed next. If you watch my S&P 500 videos, I get more in depth and more analytical in smaller time frames, but this one I wanted to kind of zoom out a little bit just to get a good glimpse as to what's going on with these tech stocks. And you know the tech stocks I'm talking about. People call them FANG, F-A-A-N-G, but now there's a new term on the street called FANG Man, which is Facebook, Amazon, Netflix, Google, Microsoft, Apple, and Nvidia. These are 7 different stocks that make up over $6 trillion in market cap in the Nasdaq 100. They're way overweighted, and in my opinion, they're really, really overvalued. So is it likely to see a big crash similar to the one that you see in the previous history of this chart in 2001? Well, let's dig into the technicals and find out. All right, welcome back. We are here on the monthly time frame, and I just wanted to point out a couple things on this time frame before we get into the more in-depth stuff on the weekly time frame. What I want to first point out is look back here to early 2000, the whole Y2K craze and the tech boom. Notice here, when I zoom in, what took place with the Bollinger Bands. Now, if you're unfamiliar with the Bollinger Bands are, in short, the way that I use the Bollinger Bands, which is this kind of like green upper line, green lower line, and middle period moving average. When the price action, when the candles go one or too far the other way, it somewhat acts as a magnet to attract back to the other direction, where it reverts back to the middle part of the chart. So when things get way overextended, you see kind of a retracement or a pullback take place. Now, these things can be, go within these upper part of the bands for quite some time, but when you really start to see retracements take place is when it gets overextended outside of the bands. As you can see here, in early from 1998 up here, it got overextended in 99, but then kind of just went sideways a little bit, creating a bull flag back into the Bollinger Bands. And then you can see here in March of 2000, it created what technical analysis people call this a reversal candle, which is somewhat showing a long upper wick outside of the Bollinger Bands, signaling that, hey, this could potentially be an area where the market can retrace. And as you can see, it did. It doesn't always happen like that, but man, that's really farly overextended the Bollinger Bands, and you get this huge pullback, and that was the tech bubble bursting. Now let's zoom closer into what's going on today. All right, so here is a more closer picture on the monthly time frame of the Nasdaq. The NDX is what the ticker symbol is that I'm looking at. And as you can see, the price here, it actually got overextended on the Bollinger Bands here in 2020. This was January 2020, and it came all the way up here, got pretty darn overextended, and we saw that pull back. Now the price recently, which a lot of people would call this 4-month rally here, a Fed-induced rally with so much stimulus, is really benefiting very select companies that make up this market. But what I wanted to point out about this rally is we are now getting outside of the Bollinger Bands again. So this is an early start to the month. This is July 7th, so we still have a lot more of this month to go. So what can happen? Well, what if we see the price continue to move higher, but then all of a sudden come down to close more down into the Bollinger Bands? Well, that would be an inverted hammer candle, which would sign, hey, this could be due for a retracement or a pullback. Think of a rubber band. When things get overextended in one way, typically if it gets too overextended, it snaps back. And this right here is one heck of a move, moving into no man's land. This is just, it's all breaking records as we move forward. So you got to look at these big round numbers for potentially resistance at 11,000, 12,000, in those ranges. Now, being outside of the Bollinger Bands, it prepares us for a potential retracement. So at this particular point in time, this doesn't look like, to me, a market that I would be wanting to buy into to go long right now. Now let's hop into the weekly time frame to get a really good sense as to what's going on the chart. All right, we are here on the weekly time frame. Yes, I am looking at all the way back to 2010. So I am showing you a 10-year trend line that this price action has been interacting with. Notice back here we saw the run up when the first time it really touched this trend line here, at least on our chart in 2010. Then you got a pullback, came back up, pulled back up, pull back up, pull back, and then kind of try to get, and then pull back. And then recently here in February, right, it hit the top of that trend line, and then we got the pullback. You saw it here in 2018. You get the idea. It has been trying to fight with this trend line. Now, I can also, draw it as a channel, right? It's kind of within this channel right here. So every time that it reaches the top, it comes back and touches the bottom of the channel at some particular time. Keep that in mind. This green line going across our screen, if I scroll back, is really kind of just like the high where there's most area of resistance, and once resistance is broken, it becomes support. So I just wanted to kind of keep that on there, and if you scroll to more recent weeks, you see the price interacting right around here with that old resistance that was broken and then became support. So it kind of broke above, retested, and moved higher. All right, so as I pointed out, the overall context, obviously, it's very bullish. Okay, it's been consistently moving up in this channel. Now, what we do know is when it comes up into this area of resistance, it gets rejected. Okay, there's two things that I want to point out here. One, that the price is actually currently above the trend line. So once trend lines are broken, or once resistance is broken, it then becomes support. However, we need to actually see the price really kind of close above it. On the weekly time frame, we'd probably have to see it above a couple of weeks and go sideways to know for sure if this is actually a real move in consolidation to move higher. So I don't trust that it's above the trend line by any means at this particular time. To me, this looks like an overextended move and it's going to retrace. Now, the other thing that I want to point out is what makes me believe that is the negative divergence in the RSI. Okay, if you don't know what a negative divergence is in the RSI, no worries. I'm going to show you right now. Okay, so notice from this point right here to this point right here, the price moved up. I went higher. Now notice on the RSI, that's why I have these blue vertical lines that are kind of dim. The RSI was in overbought territory. And then right here, so the highs, they don't match up. You have the price action moving higher, but you have the RSI moving lower. Now, why is that important? Well, let's look right here at the previous divergence in the RSI. You had the price right here, the price right here. If you scroll to the bottom here and you see this negative divergence, price action was moving higher while the RSI was moving lower. And then look at what happened as a result. You did get a huge pullback from up north of 1,700 down to 5,935. If I scroll back even further through the chart, I'm sure that we could find other divergences. Right here, you can see a divergence that took place. You got a high in the RSI right here being overly extended in overbought territory, and then you have a lower overbought. And then if you look at the price action, it was actually lower here and then higher here, and then we had that pullback. It doesn't look like huge, especially, but if I zoom in, we're talking from an area of resistance, the 40.95, let's call it, all the way back down to 30.76. So that means that's a pretty significant move, in a short period of time, in just a few weeks. So there's another negative divergence. The market looks like it responds when there's a negative divergence. So we have this overextended move on the monthly time frame getting outside of the Bollinger Bands. We have the RSI negative divergence. Where can the price potentially go? Is this showing us like, hey, there's going to be a huge crash? No. The reason why I'm pointing this out is because it's an overextended move from a technical perspective. So that means that we can very well see a big pullback take place. Now the 50 period moving average is right here, and as the days and the weeks go by, the 50 period moving average moves up and up, especially when the price action is above it. And it looks like it recently acted as support in previous weeks around these ranges, then acted as resistance right up in here. So the 50 period moving average could be an area where Nasdaq pulls back to. Now, why am I pointing this out? Well, the reason I'm pointing this out is because a lot of hype around certain tech stocks has been just flooding the media, which then brings in more eyes and more euphoria. And that means the prices get driven higher and higher and higher. And then the smart money, once they realize the signs that things are getting overextended, they might already see the signs of it being overextended. They start removing that money. And what I don't want to have happen is for people to start buying in an overextended move just to see the price come down very fast and aggressively to the downside. This type of market is a buy the dip, sell the rip. And if you understand that, this move right here is a definite rip. So at this particular time, if you have tech stocks, this would be an ideal situation to remove some profits off the table. Now, with that said, the best thing that we can do is wait for some sort of confirmation. As I said in the monthly chart, it's way overextended on the Bollinger Bands, but what would be nice to see is some type of long upper wick on the monthly candle indicating that, hey, the bears are stepping in. Now, that doesn't necessarily mean that the move will just then turn around, but in technical analysis terms, a reversal candle like that could show signs that the market is getting toppy and could start to roll over. All right, that is all I have for you on this Nasdaq 100 technical analysis review. Be very careful with these type of situations, right? When things get overextended, it brings in a lot of hype, it brings in a lot of momentum, it brings in a lot of euphoria, but you need to be prepared for when the sheep turn into a wolf and then it all of a sudden the market retraces or turns the opposite direction. Do not buy in at the top. You want to buy in at the bottom and then sell higher. Or if you short the market, you want to sell at the top and buy at a lower price. Have a good day. See you on the next video.